Hello, greetings, and welcome to Dividend Blasters. This is my 67th video. My name is Bob, and I'm an independent investor. And the focus today is that these are my go-to ETFs. I'm going to cover three of them, my three major ones. I'm actually invested in several more, about seven of them, but I'm primarily a stock investor, and I have been a stock investor for many years. Been doing a little bit more on the ETF side over the last 7 or 8 years. But I'm going to cover the top three that I focus on, at least my three go-tos. And I'm actually going to do another video coming up soon on the other ETFs. And one of them I just recently started a position in, but that's for another day. So let's jump right in. First, a quick disclaimer: I'm not your financial advisor. Purpose of this video is for information and education. It reflects my own personal opinions. So please do your own research and consult a financial advisor prior to making financial decisions. Now, what are the benefits of investing in an ETF? Well, I would say the first two are really almost the same, but I had to list them separately because they're worth mentioning separately. First, diversification. You're going to spread out the risk of your investment. Let's be honest, when you are investing in just one stock, you're completely dependent on the performance of that one stock. If it's a tech stock and it doesn't pay a dividend, you're completely dependent on the price performance. If it's a dividend stock, you're less dependent on the price. You're depending on that one stock's price and dividend. If you, let me drive this home. If you're invested in a dividend, an ETF that pays dividends, you're spreading the risk. You could be invested in several hundred stock, and you're looking at the price performance and the dividend of all those stocks. And that ETF is going to pay you some mix of that depending on their holdings. And then cost feasibility. It's just cheaper. And there's very favorable tax treatment of ETFs, perhaps compared to like a mutual fund, which is less favorable. All right, let's press on. So my first one, and I have to say it's my favorite, is SCHD. It's the Schwab US Dividend Equity ETF. This is a dividend growth and income ETF. It tracks the Dow Jones Dividend 100 Index. I've listed the top 10 holdings. About a month and a half ago, they went through a reconstitution where they reshuffle their holdings. They have an algorithm. So there's not one person that decides, well, this one's in and this one's out. They have an algorithm that decides based on performance, price or dividend performance. And that's actually for another day. But the top 10 are Amgen, the pharmaceutical company, Texas Instruments, the chip company and technology company, the defense contractor, Lockheed Martin, PepsiCo, Chevron, Coca-Cola, the drug company, Pfizer, UPS, Cisco, and Verizon. And I will say that I actually own shares of several of these, and I like a lot of them. Particularly, I like Lockheed Martin, I like Chevron, I like Coca-Cola, I like UPS. Those are all very decent dividend stocks. For people that are looking to grow their holdings through dividends, this to me is really the one to have as part of your portfolio. A couple of the metrics above I've listed, a handful of them. They closed Friday, May 10th, around $79.30. They're getting close to the top of the range, which was for the last year 66.67 to 80.82. It's a very decent expense ratio of 0.06%. What does that mean? That means that for every $10,000 you invest in SCHD, you're going to pay $6 in administrative fees. That is a wonderful expense ratio. Assets under management, it's decent. They basically invest in about almost $55 billion in holdings that go into SCHD. Now I'm going to show you price return and total return. So basically, price appreciation for the last 10 years, 107.59%. Notice the difference with total return. Total return is price return plus dividends, 182.59%. So basically, through dividends, you're going to be building your holdings by an additional 75% over price return. That just goes to show you the benefit of dripping and reinvesting your holdings. You're going to grow your holdings faster. This is a quarterly paying ETF. The yield is a very healthy yield, excellent yield for an ETF, 3.43%. I really like that 3 year dividend growth rate of 8.56%. And let me just say that a rule of thumb with us dividend investors is that we like to see the aggregate of the yield and the growth rate of more than 10%. So 3.43 and 8.56 is almost 12%. That's really a wonderful rate there between the two. They've been growing for 12 consecutive years. All right. That is actually quite rare to see that in an ETF. But SCHD is committed to growing that dividend continuously. And then the last metric, PADI, or projected annual dividend income. This is basically that if you invest $10,000, you could get a projected annual dividend income of about $337 a year. What does that mean? If you are dripping, you're going to almost be dripping 5 new shares by doing nothing. Put your money in and it grows. That's what you do. That is the projected annual dividend income. And of course, if you continually invest, it'll grow even faster. All right, let's go to the next one. Number two. Number two, the Vanguard S&P 500 ETF, or VOO. Uh, I truly feel great to own this ETF because what I'm getting here is broad market exposure. So with SCHD, I'm getting broad market exposure, but really with the dividend payers. Here, I'm getting broad market exposure of the entire S&P 500. It's going to smooth out some of these price fluctuations that are going to be going on out there. And really the S&P 500, that is the game. That's the game in town. So you can see, and you're going to see some repetition here with the key holdings, but at the bottom, the key holdings, and these are the top 10. And I've listed of course, the ticker symbol and the weight. We've got Microsoft, Apple, got NVIDIA, the GPU chip maker, Amazon, which pays no dividend, but is really an important company. And it's going to play an important role in artificial intelligence, as is all these companies. Meta Platforms, and then, of course, Google, the Class A shares, and then Berkshire Hathaway, Warren Buffett's conglomerate, and then, of course, the Google B shares, and then Eli Lilly, and if you've been reading the news and watching television, and if you have friends that have diabetes or maybe a little bit obese, they may be taking some of the medication that Eli Lilly produces and manufactures. Um, like for instance, Trulicity or Monjaro or Zepbound, some of those medications, and they're very profitable. Eli Lilly is a very expensive stock, and I will say that I own really every single one of these here, but I like VOO because it's going to give me that broader, wider exposure. And then, of course, Broadcom, it's the other chip maker, which is just a phenomenal company. It's selling for more than $1,200 a share. It's very pricey. I have several shares of that, and I'm very happy to have that. And I'm glad that they are part of this. I feel very lucky. So let's talk about some of the key metrics. The price, they closed a little under $479 on Friday. They are getting very close to their 52-week high, which ranged from 375 to 483. A very low expense ratio. It's half of what SCHD's is. It's 0.03%. So for every 10 grand, you pay $3 administrative fees. Look at how big that assets under management is. So VOO is invested in more than $1 trillion, 1.11 trillion. This is truly one of the key leaders in the ETF industry. They've been around for a very long time, and they are huge. Price return, almost 173% for the last 10 years. Total return, not bad. I mean, really good. And this is really not there for dividend payments, but it's almost 227%. If you want to make a lot of money over a sustained period of time, put some money into VOO and let it do its thing. So you may have heard that timing the market is a fool's errand. and that time in the market is much better. Well, if you buy VOO, you have time in the market. You stick it out. Okay, you put it in there and you leave it in there. Let the markets do its thing. Dividend frequency is quarterly. The yield is a little bit more modest. It's 1.36%. A very healthy 3-year dividend growth rate of a little under 6%. Dividend growth streak. They got 3 years going. Pretty good. It's going to be a little harder for these guys to do that because they're going to have a lot of holdings that don't pay dividends or pay very low dividends, like NVIDIA. And I've done a couple videos on NVIDIA that if you own NVIDIA, and I do, you don't buy it for the dividend, you buy it for the growth. And that's really the good thing about being an investor. Even if you're a dividend investor, it's very good to have some growth stocks to give your portfolio a good shot in the arm. That's why we do this. Now, projected annual dividend income with a $10,000 investment, it's about a third of what SCHD's is. Not surprisingly, it's a little under $134. So for you put $10,000 in, you will drip about a quarter of a share. That's not bad. The important thing is that if you own VOO, it's to continue to put money into it and grow it. And at some point, it'll start to grow quickly on its own when it gets to some critical mass. But here again, you're going to get that broad market exposure and great diversification. All right, let's go to the last one. The last one. Last one is QQQ Invesco QQQ Trust. And what are you getting here? Well, here you're going to get broad technology exposure. It tracks the NASDAQ 100 index. The NASDAQ 100 is very tech heavy. It really is. And you're going to see, when you look at the bottom of this, you're going to see a lot of um, commonalities with the first two ETFs, but this is going to be more tech heavy. And here you're looking for growth out of this ETF. You're going to see a very small dividend delivery from this ETF. You're going to see more growth. So the key holdings are Microsoft, Apple, again, NVIDIA. We have Broadcom, the other chip maker. And then, of course, we haven't mentioned AMD or Advanced Micro Devices. They're really the key competitor on graphics or GPU chips to NVIDIA. We have Adobe. And if you've used PDFs, they own that. The other chip maker and technology company, and really a leader in wireless communications, is Qualcomm. We have Cisco Systems. We have Intuit. Okay, if you've used TurboTax, that's them. And of course, we have Applied Materials. Those are the top 10. Now, you know what? That doesn't mean that's all of them. There's more, clearly, but I'm just sharing with you the top 10. And these, to me, are the three ETFs that I have that I'm very comfortable with to make sure that I'm covering the market. Again, what's the message here? Own the market. Okay. Don't try to time the market, own the market, spend time in the market. So, what are the key metrics here? The price they closed yesterday at 442.06. They are getting close to that range. The market's hot. The prices are hot. That range is 321 to 449. Expense ratio here is a little bit more. Okay, it's 0.2%. So for every $10,000, you're going to pay about 20 bucks. Administrative fees. Assets under management, pretty big. Not as big as VOO, about 5 times the size of SCHD, about $253 billion. Now, take a look at this. This is really instructive. Last 10 years, the price return, a little under 400%. Total return, it's a little bit more, not much more, but more. It's 443%. So again, you're going to get more price appreciation. You're going to get a little bit of dividend performance, not as much. They pay a dividend. It's quarterly. The yield is low. It's 0.56%. But again, you're buying this for growth. The dividend growth rate is really nice, 11.04% for the last 3 years. That is a very impressive dividend growth rate. They've got a dividend growth streak of 2 years. Projected annual income, $54. So you're not going to get a lot in dividend income. You're buying this for growth, dividend price growth. All right, folks, that is really about it. So here they are. side by side. You can see them right next to each other. And SCHD, VOO, QQQ. You know what? And you could actually have an entire portfolio with just these ETFs. These are very wide ranging. Let me say this: I do have other ETFs. I have ETFs that are very income focused. I'm not covering them here. That's for another day, but I will cover them. And I would say that that is about it. So I hope you found this informative. And if you would, give us a like, share the video with a friend, hit that notification bell so when we send out the next video, you'll know, and subscribe to our channel. Have a wonderful day and God bless.